Hello out there, tackle trading pro stock traders and members. How you doing out there? This is March 11th stock report. Got a lot of great setups in here. I got a bull list, bear list I'm watching, and the chart. Let's get into this. On the bull list, there's so many candidates, so many that popped up on my screener. I'm only going to give you probably a third of the ones that I'm looking at, but these are some great setups I just don't want to pass up. First one, FIS, Fidelity National Info Systems. By the way, all the sectors are bullish except the ones listed on the report, like telecom, energy, metals and miners, agricultures. So I'm only going to stick to the stocks that are in bullish sectors on bullish plays. I'm looking at this one right here, FIS. What I noticed is the breakout. Notice the breakout above the double, triple top here, pulling back. Looking for an entry in this area up here. That would be good if I could see an entry up in here. So I would like to enter just above this doji that's sitting on the 20. My profit level and my entry. So my entry is down here. I'm looking at a box area of profit in this area here. Entering when it enters the box. My target's up in here. My stop, of course, is below support down here. Next bullish candidate, Duke. Duke Energy. Now, in the energy sector, I do not like energy for bullish plays. So this is one I'm definitely going to have a nice stop on down here. It'd be a small position size if I have to go against the sector. But I just wanted to show this nice setup on Duke. It is, if you look here, it is doing the opposite of the rest of the sector. But what's interesting is just to notice a pattern. I don't know if you see it or not, but there's an inverted head and shoulders. Here's a shoulder here. Here's the head. And here's the other shoulder. And what happens on these inverted head and shoulders is they're a bullish setup. Here is the neckline. It broke out, pulled back. This is a very strong bullish pattern. And there's another neckline here. I don't know if you guys see it or not. So on this one, there is a profit potential in this box area here or on the breakout above here. Now, another one I have in that space is AEP, but this is American Electric Power. This is a utility. The same kind of thing, inverted head and shoulders. If I start seeing a lot of these inverted head and shoulders on energy, I'm going to start looking at some of these guys that have good fundamentals and catch them while they're down low because they've been beaten down. And energy is usually good this time of year. The profit center box would be above this candle. That's where I'd enter. The stop is below this candle here. There's that head and shoulders. Left shoulder, head, inverted shoulder, and the breakout. Again, the same thing as Duke. I don't know if you noticed it. There's another double top up here. So if it breaks out of there, there's some more profit potential up there. Just an interesting pattern I wanted to point out. Now, when I'm looking for stock trades, I like to buy a lot of shares so I get a lot of delta. I can scale in and scale out. So when I get a lot of candidates, what I do is I screen for stocks less than $50. That way I can buy a few hundred shares or 1,000 shares, whatever I want to allocate, because I keep my allocation the same. So in this screener here, what I did is I looked for stocks under $50, and here's some candidates that popped up. I'll go from the most expensive down. Pacira Pharmaceuticals, I believe that's how it said, PCRX. Nice pullback to the bottom of the channel. The channel is a 20-day moving average. Again, my entry would be above. Let me fix this. My entry would be above this candle here, which is the swing low setup. The setup is if I get a green candle above this one. So my entry would be somewhere in this neighborhood here. I'll put a little square so you can see it. That's where my entry points would be, my triggers to get in. My stop would be somewhere down in this area, below support. And this gives me plenty of profit potential. If this triggers in, look at how many points it is to the top of that channel. What it did is it came back and filled the gap. See the gap up after earnings? It's filling the gap. A green swing low candle to get in would be a beautiful thing. Next one, getting a little cheaper, is HLS, Health South. A lot of play in the health companies right now because a lot of stuff politically going on. I see that reverse head and shoulders forming, still forming. I can go for a swing low above this candle here, or I can wait for it to break out above this. This head and shoulders is a nice breakout if it does break above this right here, guys. That's a nice breakout area, this target here. So right between here and there, I would probably put my stop just below this double bottom, just below it. I usually give it at least 15 cents reach beyond the support. And my trigger would go just above this here. Probably just above this candle here or this one here. Not a lot of room to make money here, but this is counting on the breakout. If the healthcare sector is strong, I'll get in early. I won't wait for the breakout point. Again, if the sector's strong, I'll get in down here in the swing, not the breakout point, because there's confidence that the sector will make it break out. Getting a little cheaper here, FNF, Fidelity National Financial. Just a good old swing low setup on the financial sector. Right here, this stock, you can see the pullback. We got a lot of resistance up here, almost a triple top. But I like this because I could buy a lot of shares. The trigger would be right here above the swing low. In fact, if I would have saw this Thursday, I would have been triggered in already. The stop loss will be down here in this area, down here below the pivot, and the entry would be above here. So my stop loss is just below the pivot. Next one, getting even cheaper, PPL Corporation. Nice swing low setup here. Again, I like the stop down low. And why do I like cheap stocks? Not only because I can buy a lot of shares. That's not about it, because you can buy one share of an expensive stock and you get a good % return. It's the same thing. But what I like about buying a lot of shares on a cheap stock is you see the ATR over here. The ATR is 46 cents on the left-hand side over here. I'm going to put the box next to it up here. What I like about that is an ATR, with a small ATR, you need a lot of shares, okay? And with a lot of shares, I can scale in and scale out. Got a nice trend line going here. Got a nice trend line right there. A nice pullback. Beautiful channel going on. And that's PPL. Getting cheaper at only $27. Corning, GLW. Again, a nice channel formed right there. If this sector and the market stays bullish, I do like the area just above this setup candle right here to enter. My stop's going to be down in this area. There's still a lot of profit potential. 34 cents, not a big ATR. A lot of shares though, makes it easy. Now we're at the $23 level. Look at this pullback here. If you can see it, what is this pulled back to? This is pulled back to, here's the stop area. Why? Because the pullback area is going to be right there. It's pulled back to this area here. Here's your swing low setup. My entry is going to be just above this candle. Just above this candle gives me a entry area right about there in that range. Lot of room to make money up here. Profit potential gives me a box area of about here. So here's my trigger. Here's my stop. Profit potential. I like to keep the area between my entry and my exit smaller than what I can make. Risk small, reward big. APO, same thing. Nice channel set up here. What do I have? Long-term and short-term bullish trend. This thing's been good. About a 57-cent ATR on a $22 stock. Not bad at all. If I get triggered in above here, a lot of room to make profit. A very small stop loss. Again, low risk, high reward. Now at $21, EXAS. I'm looking at a nice pullback here. Possible trigger. Possible trigger to be above this candle. A lot of room for upside. Very little room for downside. Again, let me put it in here. The stop is going to go below this support down in this area. My trigger end is going to go above this candle in this area. Look how much room there is for profit in here. A lot of room for profit, very little room for risk. Small risk. Look at the size of that rectangle there versus the size of the reward. That's what you want. See, I can do a lot of shares because that is a small risk reward and a lot of reward. I don't have to win very often to make up for any small losses. So put in your position sizing down in the calculator below and put in your risk and you'll see. Just fill out the calculator for both stock and options at the bottom of the stock report and the option report. Look at this one here. Nice channel. Long-term and short-term bullish. This is First Data Financials. First Data Corp, trigger to swing low. I don't mind getting in just above this candle here for a trigger, just above this candle here. Support is down here. That's where my stop's going to go. Again, low risk, high reward, very cheap stock. Very cheap stock. I might even hedge it with a covered call. Definitely check out the option report. There's some great naked put and covered calls in there, especially some contrarian trend naked puts. Bears list. The only reason I got Bed Bath & Beyond in here is because Bed Bath & Beyond, BBBY, triple BY, it's got some fundamental issues going on. I'm not going to get into fundamentals, but in here I got a funky looking bad head and shoulders, but it's breaking down. Here's the left shoulder, head, right shoulder, that's real. But what I'm really seeing is this, a big bearish triangle. It's not that great of fundamentals for a Bed Bath & Beyond. A break below the support here. A break below the support would be my trigger, and my stop would be to exit would be up in here above this candle. Now, here's the thing. I personally like to use long puts. I don't like to short stocks. So if you're going to short a stock, protect it with a long call or with a stop loss. Do not go out and short stocks without some kind of protection in there. Next bearish candidate is Outfront Media. Look at the swing high in this one. A gap down on earnings, fills the gap. There's your kiss of death up here. Look at the volume building up on this ever since it gapped down. A lot of volume down here. This is all short covering and bears jumping in. This candle right here is a dead giveaway that it's probably going to go lower. There you go. So looking at this, I missed my entry here. That had been a great entry, but I still think there's some downside. I might put my trigger in this area here. The stop loss, I'm going to give it room up in here, just above this pivot actually. So I want to give it a stop room. I'm actually going to go above this pivot here. Give it room up there. Next one is Rice. Rice Energy. Bearish sector still. Energy. Here's a nice downward channel here. My trigger's probably going to go below this support here. That little doji candle for some reason found support there. But a trigger below that, it's a very, very cheap stock. It's under $21. So shorting this is okay. But also buying puts is my preference. The ATR is 86 cents. So there is some good movement, even if I'm playing a cheap stock with a put. Seas. Now, I've never shorted this company, but this is SeaWorld Entertainment. Love the theme park. Unfortunately, there must be some bad news or something. We have a range up here, this high base that it formed. Definite double bottom right here. The trigger would be below this double bottom if it ever gets there. The main thing is this. The reason I can see it going bearish is the earnings, negative 14 cents. Again, I'm a fundamentalist. I'm always looking at earnings. There's no profit here. Something's wrong. There should be profit. We're going into summer season, but if this does break down, that means there's something fundamentally breaking down. That's a good short candidate. Last but not least, Dean Foods. Dean Foods, big old gap down on earnings. It's rallying up. Hit his head on the 20-day moving average. There's your doji. My stop will be up in this area. My trigger to get in would be down in here. Not sure what's going on with the fundamentals of this company, but they're not great. It has been in a downward trend, long-term and short-term. And the earnings were disappointing because it gapped down. I'm looking for resistance up in this area. If it keeps going up, I'd still keep it on my bearish watch list, even if it got up a little higher. But when I see a doji hit a 20-day moving average and give me a perfect textbook setup like that, I've got to consider an entry place for that. So my target on this one, believe it or not, is way down here at 16.5 to 17, right in there. So a lot of reward versus risk. Let's see what happens. So stay tuned to the stock report, guys. That's all I have. There's plenty of candidates out there. Log into our forum to see the updates. Have a good trading week.